Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicator Explained, we will be looking at one pattern recognition, which is a traditional structure used to identify the support and resistance levels. The name is rectangle pattern. This is named as a rectangle, and from it you can make a guess that this formation relies on two horizontal lines, two nearly horizontal lines, which helps us in defining the support and resistance levels. So these are the price levels which have been tested, or you can say even retested by the underlying instrument, the instrument of our choice, multiple times. So we have now come to rely on these levels to help us in figuring out the levels which we can reliably use to initiate the new trades using these price levels as support and resistance. So we will see the patterns basic concept, its utility, and also some of its representative examples on the newly released platform, the JForex 4. There is a Euro USD chart drawn on the hourly time frame. For you to know where this indicator can be found, you simply have to go for this add indicator option. And if you feel that this is too slow, you can even do a quick search, type in rectangle pattern. Hello Salman, how are you doing? We are considering the rectangle pattern for today's session. This is it, and let us see where this pattern took shape in recent history. And on the hourly time frame, all right, here we get. Hey Fotante, sorry if I got your name wrong. Hello everyone. So this is the formation. Horizontal lines have been drawn, and here in this case it is from February. In late February we saw this structure taking shape twice, and in both these cases, as you can see, we had the price formation where the lower level was acting as a support, and on the higher side we were experiencing resistance. So as long as these price levels were holding well, we could have gone on to initiate the trade and try to use these price levels to act as the support and resistance, and within that range would have been able to make money as long as the price levels hold. And in this case, I'm doing absolutely fine. Let's consider this price formation. You can also ask any questions regarding this formation. For these examples, here we are considering these price levels formed in late February. And in these cases, you can see that here we had these price levels of around 1.062 acting as the resistance. And on the lower side, we had the support coming into play around 1.058. Eventually, we saw this break. So in this formation, your stop loss is going to be fairly sharp, because even if the price deviates little bit from this formation, you can call it quits. You can take it as a signal that this structure is not really holding well, and this might be the time to close the trade and sit on the sidelines. So here, this formation is drawn using the price levels which have been tested multiple times. So here we saw these price levels being tested and retested again almost thrice, and on the lower levels it saw the rebound three times, and then on the fourth turn it gave way. Similar kind of price formation also took shape earlier. Let us look at some more examples. Maybe on the lower time frame we will find some. So let me shift to the 5-minute candle time frame. On the 5-minute, Let's see where. All right, here we are getting a couple of examples, and these are seemingly overlapping examples. Now, if we feel that 5 minutes is going to be too low and there might not be enough price moves within that range, we can go for time frames like 15 minutes. I think for the intraday, 15 minutes or half an hourly should be good enough. For the swing traders, the time frames like hourly, 4 hourly are going to be much more helpful than shorter time frames. Now, in this case, here we had this 15-minute formation where we saw the price reversing twice from this resistance zone, and on the lower side it also rebounded again from these levels, but these are fairly small price ranges. We would not have been able to profit much from these. I think this is not really the time frame on which this rectangle pattern is going to be much helpful. Maybe half an hourly or hourly is going to be a better option. Let's see what kind of average range, price range we will get when we are using half an hourly. All right, so for half an hourly, at least the price range expands towards 20 pips, so not bad, I would say. And in this case, when the price range was trading within these horizontal lines, the resistance and support was respected. So on that occasion, you can absolutely take the advantage of this. But when there is a significant breakout, as is the case here, maybe after you see good enough deviation from these support or resistance level, you can go to initiate the trade with the expectations of the breakout, a clear breakout. So that is also one additional way you can rely on this price formation to give you opportunities, trading opportunities where you can be fairly confident of making good amount of money. So from intraday perspective, I think the time frames like half an hourly or even hourly are going to be quite well for this formation, the rectangle formation. Let us see more examples in different instruments. Let's consider the case of light crude oil. Okay, here we are getting one example. You could have tried to short sell it whenever you saw it struggling closer to the higher levels of around 74.5, and that would have brought in decent money. On the lower side also it got support and rebounded once, and in the second turn of event it declined substantially, and since there is a shorter time horizon, the deviation was not that much, but still, this was a case of a breakout on the lower side. But this time around, it couldn't be sustained much. Sound is not strong enough. Let me try if I can keep the mic nearer to me. Okay. Please let me know if it is better than earlier. And in this case, here we are getting this breakout on the lower side, but this is a case of a false breakout. It wasn't sustained much, and immediately afterwards, the price reversed course again and went on to rise. So this would not have really helped you make much money. All right. So I think the time frame like half an hourly are not going to be much helpful on these light crude oil chart. Maybe in currency segment, the half an hourly is going to be a good time frame, but not so much for light crude oil. So you will have to see what kind of time frame is going to be helpful depending on the characteristic of and properties of the instrument of your choice. So too much if the time frame is too low, this is not going to be a good idea. Let us try increasing it, maybe 4 hourly. That would be a better deal. Let's see how things shape up. But this is also going to make it much rarer. The frequency of this formation is going to go lower whenever we increase this time frame. As I said, till August we have gone back in time, but we haven't even found one example. Let me shift back to Euro. Euro, okay, no. Let me try GBP USD. Still the same, then I think there is not much that can be done right now, but surely for next session, I would try to make some improvements. Sorry for your trouble. 4 hourly, and here also we are not coming across any example of these rectangle pattern, which might have taken shape in last couple of months. So I think for representative examples, we will have to again shift back to hourly time frame. Okay, so these are the examples. And in both these cases, you would have been unable to use these price range defined by the rectangle pattern for trading within the pattern, and also after there was a breakout and in a subsequent candle, if you saw the signs of that breakout sustain, you could have even initiated the trade for taking the advantage of that breakout, and you would have been able to make money. So when the price is within the range, even in that scenario, you can try to take advantage of the situation. And also when there is a breakout, you can try to exploit the breakout. So both ways you can rely on these rectangle pattern to help you in figuring out the trading opportunities, and the probability of making good money is going to be higher as well. So that's my take on this formation and its some of the uses. Always keep in mind that not all the trades are going to be profitable using this formation. See you soon, Salman.